Good afternoon, everyone. Bill Ulivari with Senecal Capital Management. We're going to spend a few minutes today talking about the market and what I see going on out there. Today is February 23rd. It's a little bit after lunchtime. And I just want to remind you that the stock market is a lot like a magic trick where the magician, in this case, the news media, is trying to get you to focus on something and it's not really happening. And there tends to be a little bit of this question is, wow, the market never did what I think it was supposed to do. It just did something completely opposite. And so it's a lot like this magic trick I learned when I was in grammar school. So we have this 1 ounce silver coin here. You know, it's a real silver coin. And the idea, it seems like we get distracted on so many different things. And the market does the opposite of what we think, what we view with our eyes and with our mind. So again, the magician's trick, the magician's goal is, it's called the pledge. This is part of the trick, right? Sleight of hand. And again, the market is much like that. So why don't I just go into showing you some charts about what I see, and we're going to compare that with what we hear and what we want to believe. So let me just click on the screen share here. And I'm going to have to turn my focus away from the camera just as I go through these charts. But what we're seeing here is a chart of the Dow Jones Industrial Average. Here is the going into 2019 into 2020. Everybody was clamoring about the market going up above 30,000 for the first time. Barron's had a big yellow and black full page cover about the market making new highs and how awesome things were going to be as we were getting ready for 2020. And what happened? Just the opposite happened. We had this incredible decline, the pandemic, COVID, uncertainty, business shutting down, the lockdown, everything you can possibly imagine kind of happened in 2020. But just when we thought the news was at its worst and we were not going to regain our economic footing, the market staged this incredible rally. And then we, like an up escalator, just continued forward. Now, don't let this chart fool you too much. Green is good, which means buying pressure. Red means selling pressure. So buying is green and X is red is selling. So it's just a way of looking at a lot of data in a very short, condensed way. So the market has had a decline this week and a little bit last week, but honestly, we hardly had a decline. This is just a normal pullback, so I wouldn't get too worried about what's going on in the market right now. We won't get worried until we trade about 29 to 28,000, then that will be an issue for the market. But right now, this is just a healthy, normal pullback. Here is a chart of the utility index. Utilities are gas utilities and electric utilities and water utilities. Anything that is a public utility that provides electricity or gas for your home. And again, we saw this incredible rally as investors were looking for yield, looking for interest rates, high prices in utility indexes and how things were going. And again, the market just pulls the rug right from under it in the 2020 COVID issue. We had a huge decline in utilities, which is generally considered safe, right? The widows and orphans type of investments. And again, we regained our stability. The market has had a slight decline because it's expecting in the future higher interest rates. So they're going to compete with utilities and gas prices and energy prices. The third chart I would like to show you is the long-dated bond. These are 20-year bonds, kind of like mortgages, where we see a really nice decline in the beginning of this year. Higher interest rates expected, maybe some inflation due to the 1.9 trillion stimulus package going out. We're going to see the inflation part of the economy perhaps pick up, but this is what we are led to believe. I'm not so sure yet, because again, we haven't really even declined below our 2019 and 2018 levels, to be honest with you. So again, I still think that interest rates are just this normal swing, this ebb and flow, like a hammock in the summertime, like a clock pendulum ticking back and forth that a hypnotist gives you. Overbought, oversold, fair value. Overbought, oversold, fair value. And that's how we have to play this right now. We're just in a little bit oversold area with bonds and the interest rate complex. And here is the most speculative thing. This is the opposite of bonds, that being Bitcoin. Bitcoin is a digital asset. That's a digital gold designed to be a digital cash that you can, like a dollar bill, where you can transact electronically without the need of a third-party intermediary like bank or PayPal, Square, people like that. And I'll get into that complex and Bitcoin a little bit later. But here I just want you to show you that We've had a decline in Bitcoin, but again, this is just part of a massive, massive rally that we've seen since the end of, or since the beginning of 2020. This is the middle of the pullback, the middle of the bell curve, the middle of the summer hammock that I was talking about. We have a long way to go for Bitcoin to decline and still be a perfectly healthy retracement and healthy pullback. And here's another chart I'd like to show you. This is a more traditional bar chart. We rallied from the elections 2018, 2019 into the beginning of 2020. COVID decline of an impressive amount, and then a rally back up, and this is where we're at here. So you can even see, though the market is discussing, you know, the good times ahead. This is like the 1920s all over again, the roaring 20s, stimulus package. We're so good to go. I just have to close my eyes and buy stocks, and we're going to go higher. But I tell you, I'm not so sure it's going to happen that way. I think we're going to see a little bit of a decline, and maybe the market, you know, peel off here a little bit in 2021. So again, we're not really sure. We just have to keep our eyes open. We have to always compare and contrast what the market is telling us via charts with what we hear on the news media and what we see in our Facebook feed. And again, remember that the market is a lot like that magician saying, ooh, 1.9 trillion stimulus package. Market's just got to go up. Let's just buy commodities. Let's just buy stocks. Let's just, everything's good times are here again. But I'm cautioning you that perhaps things are not exactly how they appear. And in closing, I just would like to ask my viewers and my clients who this is designed for, just have a question for you. And it's something completely not related to investing, and that is, if you could have witnessed one event from your family history, what would you want to see? If you could have witnessed one event from your family's history, what would you want to see? And you can call and leave a message at 847-686-4800. You can send me an email at info@senecalcapital.com. Or perhaps for those that have my phone number, you can send me a text message if you like. I think that would be an interesting conversation. But again, for me and my family, I would love to see the Italian side or the Irish side of my family, the look on their face as we were entering the harbor in New York when they had an opportunity to see Ellis Island, the Statue of Liberty, and perhaps even recite the poem at the base of the Statue of Liberty. For me, the new Colossus, I think that would be absolutely amazing. That would be the one event in my family history I would like to see. So thank you for joining me. Feel free to pass this along to any family and friends if they're interested in knowing a little bit more about the market and how things look through the eyes of an advisor. We still are mainly invested. We took a few chips off again along the way. And again, we just have to be careful here, but I think we're going to see perhaps a tone shift going forward. If you have any questions, comments, give me a call. Thank you.